So we did prepare our advisors and their clients for the possibility of some turbulence. This is something that happens, and we laid it out in the 7 headwinds in our 2026 outlook. So this is not completely unsurprising to us. But ultimately, we do think that the 10 tailwinds and those very powerful forces will re-engage and ultimately take this stock market to a higher level by the end of the year.
So to your mind, what are those tailwinds for 2026?
So the biggest one I'd have to lead with, Alexis, would be good old-fashioned earnings growth. And we're still working through the current reporting period, but it looks so far so good.
So talk to us about, I guess, just over the weekend, the volatility we've seen in gold. I mean, a lot of folks were saying, not surprising, because we've had such a crazy run up in gold, silver, other precious metals as well. Is that what you kind of chalk it up to? I'm sure you probably got some crazy phone calls from advisors and clients here saying, oh my God, I just piled into the gold or silver ETF last week and now I'm getting crushed here.
Right, this is what happens. So we have offered gold in our liquid alternatives strategy at WCG, and we're pleased to show that performance. But we also change our tune as well. And if consumer sentiment is a vote on job security, I think it stands to reason that bad feelings and low morale and high gold prices kind of go hand in hand. But the shift here, the change in thinking, is that gold should continue to lose its luster amidst an economic boom, if we're right.
And how much does the dollar have to do with all of that, right? I mean, it was direct correlation. We saw the dollar start to strengthen, and that's when sort of the legs came out from under this precious metal rally.
Well, so I think that dollar weakness would actually be an opposing argument to my stance on softer gold prices, if you will. I really get there through the safety or haven premium that gold has benefited from. If we have kind of twin tailwinds of supportive monetary and fiscal policy, easing financial conditions, a reaccelerating economy. Remember, guys, this is a 4% plus economy. So that's underway. I think it makes less and less sense to have a large holding in gold.
What did you make of the nomination of Mr. Warsh to be Fed chair? Did that change maybe your outlook at all? Because it seems like there will be some level of pressure on him to bring rates down here. And does that change your outlook at all?
That was a thinker. So I know that there are some questions about his track record as a forecaster, and he is known for previously being an inflation hawk. But look, if he has more recently committed to lowering interest rates, at the same time not expanding the Fed's balance sheet, I think that could still work, guys.
Talley, I want to talk about alt assets and bring in Bitcoin here because it's flirting with the lowest level we've seen since Donald Trump retook the White House. Do you think there is more room to the downside? I mean, are we going to see Bitcoin 70,000 before we see Bitcoin, 90,000?
Well, so we have held Bitcoin in our liquid alts strategy, and there were times when it did well, and there's times when it doesn't. So if we're right about our previous discussion, dollar weakness and Bitcoin being an alternative store of value, I think for the real diehard believers there, this could be one of those buy the dips moments. And there's an acronym for it. Hold on for dear life.
Yeah.
Instead of FOMO. I like that.
Yeah. Exactly. Bond market, great returns in 2025 here. What's the call for your clients for the fixed income market in 2026?
So that's kind of part and parcel to the whole easing in financial conditions. Markets are doing the Fed's job for it until we get a new master at the helm there. And so I think once we get past this kind of recent perk up in oil prices because of tensions in Iran, I do expect that the 10-year Treasury yield will continue to soften, and bond markets should have positive, albeit perhaps low single-digit returns.
I'm glad you brought up 4% growth because you kind of forget that it's that strong right now, right? Because it doesn't feel that strong. What's going to prop it up for the rest of the year? Because there are still so many headwinds out there, including, let's not forget, possibly inflation heating up. We got a hot PPI number, right? I know it was backward looking. It was a December number, but hotter than expected last week.
Right. So it's a sequence of events. And so I think it really starts with those kind of dual tailwinds of supportive fiscal and monetary policy. We've got easing financial conditions. That's a pretty significant tailwind on top of very robust corporate fundamentals here. We've also got this kind of stealth, to your point, Alexis, reacceleration in the economy. That's not even a forecast, that's a reality. And if we're right about all these things, we've got this positive wealth effect. It should also engender improving consumer fundamentals driven by those improving business fundamentals. Productivity is a big part of the story.
Absolutely.
That's also helping keep productivity adjusted compensation costs under control.